All right. So video number one was absolutely awesome. I'm so excited that we got to do that for that very special 16-year-old, because I think that that will be, if they can stick to it, they will have a life that they truly will pinch themselves on a daily basis about.
Oh,
So,
yeah. I mean, when I was giving my response, I was talking to myself.
yeah, exactly. Talking to ourselves when we're that age. So in segment number two, what we wanted to cover is stagflation. It's no fun. But since Mike's our resident economist,
yes,
we're going to let him kick it off. And then I'll give you the lumberjackian view of how things are going, which is usually fewer words, but far more crude. And so
now let me tell you what Mike really said.
Yeah, exactly. Yes.
Yes. Well, again, I want to give credit where credit is due. Ken McElroy put out a video on this, basically talking about stagflation is here.
Yep.
There you go.
Is it going to be 40%?
No, it's not. He's not going to make that call. He already lost.
Checking.
He already lost that bet to us. But stagflation is here. And again, I want to call out on my channel, One Rental at a Time. I have a whiteboard playlist now, which people really love. So I'm going to keep doing them. But I actually went out and did a 2022 plan and 2023 plan, which essentially was stagflation in 2022, recession in 2023.
Mm-hmm.
So what is stagflation? As Ken McElroy highlights, it's basically made up of three factors. One, rising inflation.
Mm-hmm.
If you're living under a rock, if you haven't seen higher rents, higher gas, higher foods, inflation is a problem. Number two, rising unemployment. Now, this one might surprise a lot of folks, but again, I broke it down in my whiteboard discussion, because right now we have unemployment that is falling, right? We do have these statistical things called U3 and U6, all of that thing. Just think about layoffs are coming. Mm-hmm. And then finally, declining demand, which is perhaps the most important thing, which is happening right now that people are missing. I talked about in my daily financial news this morning, families that make six figures combined are roughly 25% of the population, but 75% of the spending. Think about that. And that group is scared. They are delaying purchases. They are delaying vacations. They are shopping less. Folks, a recession is coming. So, but again, we will first have a year of stagflation, which is icky. It's just yucky.
Yeah.
Higher prices, no growth, more unemployment. Welcome to the misery index. Something I brought my channel 6 months ago was the definition of a misery index, which is the unemployment rate plus inflation. It is something that hasn't been discussed since the 70s in Jimmy Carter. It is going to happen. We're going to have high inflation and higher unemployment. It is a misery index should not make you feel good. It's when we're talking about the misery index, it's not a good thing.
What was it under Carter?
It usually is in the teens.
Right.
Usually in the teens. And I mean, because again, think about a 13% misery index. It means you have 7% inflation, 6% unemployment. I mean, that's just, it could be 7 and 6, but it's not good, right? Historically speaking, we have right now, we have anytime it's double is a problem.
Double digits?
Double digits is a problem.
Yes. Yeah. That's where I was kind of getting at. Yeah.
Yeah. So 2019, unemployment was 4.5. Mm-hmm. Inflation was 1.5.
5.
6.
6. Sorry.
6. Mm-hmm. Today we have 8% inflation and call it 4%, 12. Yeah.
We really have 8% inflation.
It's in the formula. Reported, yeah. CPI.
Yes. Yeah.
Well,
because rents are only going up 0.2%.
Yeah, it's just nuts. It's really more like 11.5 or 12. But yeah, so anytime the misery index is double digits, problem. Jimmy Carter, teens, problem. Yeah. Like 10, 11, problem. 13, 14, bad. 18, 19, horrible.
Yeah.
It shouldn't get in the 20s. But under Carter, it did very briefly when we had inflation at 16 and unemployment at 8 or 9. So it gets in the 20s, it's ugly. But in the end, we're going to have an environment of stagflation. So what I would tell people to do is it's time to get ready. We are going to have rising unemployment. In fact, in my whiteboard discussion, I talked about unemployment exceeding 6%.
Yep.
That's historically speaking, historically it's not bad, but it's double what it is today.
Right.
We're going to have inflation north of 5%, even after it breaks. I think there's a good chance that inflation peak is reported this month or next over 8.5, maybe even 9. But again, it rolls over, but it stays high. And then we have GDP. GDP, consumers are freaked out, man. You cannot have rising gas, rising food, a war, higher interest rates, mortgage rates, all of these things, and not retreat. And it just means it's going to be a slow and icky year.
Sounds ideal to buy a Lamborghini.
Well, I mean, that's why you're an investor.
Yes.
Because I talk about the reality, and then there's a few of us, you and I, that rise above it, that got ready for it, right?
Yes.
Got some dry powder.
Yes.
And we're like, we're going to go to those high leveraged idiots who thought the good times would never end. And we're going to be there when they need to liquidate and raise some cash, because we are about to, as Sam Zell says, have a liquidity crisis, which means the people that with the money, like Jamie Dimon and Warren Buffett, they get to set the price. And it's a great position to be in. So lots of people will be hurt. There will be a few of us. And again, if you're on the Lumberjacks channel or One Rental at a Time channel, hopefully you are hearing us and taking action and doing the work, because motivated sellers will be 10 times easier to find, whether that's an orange Lamborghini, a red Ferrari, or a 4-unit, a fourplex. There will be some motivated people that need to raise capital, and you, as the person with capital and or credit or access to non-QM loans or whatever it is, you can come in and save the day and set the price.
I mean, it's literally going to be like the end of the movie in Trading Places. I just haven't figured out who's playing Dan Aykroyd and who's playing Eddie Murphy. So,
I'll be Eddie Murphy. It's okay.
Buy. That's literally, I mean, Mike,
I've been here before.
I know. This is what it was like. Like 6 months from now, a year from now.
Yep.
This is the problem. Is I don't think it's going to happen on housing. I think the door is going to crack open on housing, but on other types of assets, motorcycles, trucks, four-wheelers,
the toys.
Oh my word, my toy chest is going to overflow it. And the thing is I will do it for the price of what one of those toys would have cost. Oh, yeah. I will get all 4 or 5 toys that I want at a fraction of the price, because people are going to need to run for the exit, because they're going to need to create cash or dump a payment. A payment.
Absolutely.
So,
it's coming.
Yes.
But
don't expect it. But don't expect it on the housing market. Like, don't expect
it's not
there's going to be like this 50% off on the houses. It's not
coming to singles. Again,
no.
It won't have any place. Again, there's something called Haslow's hierarchy of needs. I don't know if I'm saying that right, but basically water. If you don't have water, you die. After water, it's food.
Yep.
Then it's housing.
Right.
Why did housing crash 75% in my market last time? It's because the payment went up to above rent, and people chose, financially speaking, it is cheaper to rent than own. Because why have a $2,500 payment? Because these 2 and 28s killed me, right, when I can go rent down the street. And oh, by the way, I get to live for free for 2 years. So cool. Today, you're looking at an $800 payment. And if you go rent down the street, it's $1,600. Who's going to make that decision? You're going to invite your sister, your aunt, whoever to come live with you.
That's right.
It's not coming to resi. I'm sorry, but it will come to toys. It will absolutely come to multifamily. Jonathan and I talked the other day. I am frightened for some of these folks with bridge debt and syndications doing value add. Oh, it's going to get smoked.
Yeah. Like we talked about it. If you're a developer and you're 8 houses into a 10-house development, you're going to be okay. Let's get those last 2 on the market and get them done so you make your money.
Yeah.
If you're number 2 out of 10 right now, buckle up. You better have a lot in reserves, because just in the last 60 days, your debt service is up 250 basis points a day.
Yeah. I actually had this in my daily financial news, but I was rambling, so I didn't include it. There's something called I-beams for 2-story homes.
Yeah, sure.
That you have to use to make the building structurally support. They now have a 4-month backlog. Yeah. Kind of important. So there are national builders who are refusing to build 2-story homes right now. They're only building 1-story models, which, oh, by the way, probably means housing is going to go up, because again, a lot of the square footage is on the second floor.
Correct.
It is. You could not create a situation this crazy, right? I-beams, kind of an important part of a second story, 4-month backlog. Talk about dead days, right? It's just
Well, the things that we saw people doing with pressure treated lumber, when pressure treated lumber you couldn't get last year or 2 years ago, the different things that builders had to come up with that were much more expensive, but that still met the need so they could keep on building. Other stuff is going to happen, like laminated LVLs and things. It's
wild.
It's going to be very interesting. Commodities are going to be very interesting.
Yeah, I am going to build an ADU this year just because I have it on my vision board, but I guarantee you everything will come from Home Depot. Nothing is going to be custom, all off the shelf stuff.
That's awesome.
Oh, I don't have that one. I'll take that one. No big deal. Let's go.
Exactly. Whatever. Literally, this is the conversation I have when I call my suppliers. What's in stock?
Yeah, exactly. Don't ask me what I want. Just tell me what you have.
I say, I don't buy 1 and 2. You know that I might buy 3, but only if it's discounted down from a 4.
Yeah.
So I usually buy the 4 stuff, the step below the high end. And they're just like, and so I always start off with, what do you got in stock?
There you go.
That's the only option. So Mike, tell everybody where they can find you, my friend.
One rental at a time.
That's where you can find them. 5 videos a day, YouTube, books, courses, Business Insider, a bunch of other people's channels on YouTube. He's everywhere. So guys, as I always say, we try and create great content for you. Give us that thumbs up and make sure you subscribe and check us out on our live streams, 8 a.m. Pacific time tomorrow, 11 a.m. Pacific Eastern time on Saturday for Mike, 11:30 a.m. Eastern time, 8:30 a.m. Pacific time on Sundays. Mike, thanks for the time. Look forward to segment number 3.
You got it.